TradeTheMBI.com. This is John's reports for the 19th of September. Well, no shock. I mean, everything went pretty much according to plan on Friday. Actually, we dipped below the 23%. Fought their way back up to it, but damage is done. I mean, we already started the morning with MBI white pivot upwards, continuation of magenta and that lower. There was no assistance here on the DOC. You got green, which is midterm buyers fading. You got long-term buyers, which is red fading. The only thing that was holding things that gave any possibility that we would keep that 23% was the rising steel, but shorts adding into that. So as the pump came back up, shorts added into it and being rewarded for doing so right now. Futures are only off 29. They've been down as much as 40, so that's a pretty decent improvement. And it's just a realization of what we've known for since the beginning of the year, how things were going. And then once the whole sanction thing developed with Russia, it just exacerbated it. And then every wrong decision you could make regarding oil, energy, and everything else has just compounded to it. Thankfully, they averted the rail strike. Well, yeah, it's still up in the air, but if that goes through, sky's the limit, because that would just pretty much shut down the economy, and actually makes things worse because most of the inflation we've been seeing is from a supply side situation. This isn't something the Fed can really solve. The easy money thing was really throwing the market into the stratosphere, just because you can continue to speculate as long as you just keep getting free cash. So now that it's a little bit more expensive, you have to weigh those decisions a little bit more carefully. From an NQ standpoint, looking identical to what we're seeing from the S&P. So there's congruency there, and this is what we talked about too: the lockup of buybacks and just some of the limitations that were taking place as far as money flows led itself to that option X being soft. That I kind of expected that after we had the dip, there'd be those late time buyers, and there were, and of course, just fading that now. The euro continues its devaluation, or as we should say, just survival mode, as it just peens across. Everyone's just counting the days until the weather starts getting cold. In fact, it changed dramatically here in Italy in the last couple of days. We went from those upper 80s to now mid 70s instantly. And if that starts to break down a little bit colder, the drain on energy will be interesting to see how they're going to start solving that, particularly if things get cold earlier. And of course, no one's expecting inflation at that particular stage, so gold fading that earlier. Um, and again, a lot of this ties into the bifurcation of the markets now, where you have the West being its own supplier, trader of somewhat digital or paper gold and silver. If you looked at the numbers coming out of Bank of England for silver storage, um, it just isn't any silver. I mean, it's been all filled to various other countries that have repatriated their silver. And then the remainder of what they were holding, a lot of it is already pre-committed to ETFs, of which they really, given their tonnage that they're stating, don't really have enough to redeem. So again, now you're getting into a situation where you're trading a commodity like gold and silver that physically doesn't exist in their possession. So that's an interesting one that will get played out in the coming months, particularly if there's a draw or a continued strain on it, because the physical demand for it is still up there, and you're only going to add to that when they want to turn everything into electric, this, that, and the other. From an oil standpoint, still holding in the lower 80s. And again, I think that we have that floor around the 80s because the U.S. said they wanted to buy back for the petroleum reserve at the elevated cost. So that should be enough to support it, which ironically you would think their suggestion is they don't want to have a collapse in price. Well, collapse in price, at least a move back down to the 50s or so, or suggesting that you're not going to buy it until it reaches that level, seem to have made more sense than telling everyone you're going to buy at 80. But this is what we get from a treasury standpoint. Yeah, we expect the yield to continue to rise, and of course, is bracing for the Fed's actual decision on rates, and so we expected the lows of TLT to break because that will justify the higher yields, and we already know that at 107 we're still too high. That was such an easy call from the 160s. Bitcoin, if the market's going to be in strain, so is Bitcoin. It's traded pretty consistently with it in these last months, and with the liquidity dry up and interest rates again that no longer easy access to free money. Close break below that 18, and I think that we're again talking about moving back towards the 13. That would be a shocker to a lot of people. ETH suffering similar down to the 13 range, but still well off its high. So it's performed significantly better than Bitcoin overall, and that's just simply because of the demand function of uh, Ethereum over Bitcoin at this particular stage starting to become more apparent, and not much justification anymore in this idea of keeping wealth stored outside of inflationary currencies when the U.S. is still dominating that for now. Could change. So I mean, there's no question that potential still exists. From a 50K standpoint, yeah, that weakness still pronounced, still fading off a little bit. Kind of pivotal point here because as that magenta continues to fade, if white exceeds it strongly right now at 1478 versus 61, so it's right there. But a clear signal on that from the 50K would be more catastrophic than what we're seeing here in the post market. So we had the extreme finish going into the end of the day. And you can see how that created almost positive extremes. Those were strong yellows even earlier in that move. And the gap down just filled all that baloney in place. And a little bit of a tempt up, but literally it's just been straight selling throughout much of that session. We're starting to see the first elements of buy. We got red leading that, so the first pivot down certainly going to be problematic. But of course, if green gets over it, this is that same configuration we talk about repeatedly taking place. A fan of covering those pivots anyway and waiting for that first sign of weakness. But of course, I had to reboot, so all the markings that I had from the previous day are gone because every time I reboot or at least do the backup for TS, it gives me a crash when it restores, which is always fun. But if we scroll back here nice and softly to the beginning of the day, it started off with that weakness. And I expected that we would flatten out, and that's what I talked about on the Skype chat there, was that we would fade a little bit, soften out, and that would create great opportunities for bulls to press the other side of it, which they in fact did after a significant series of failed attempts, and all of those led with white and then the breakdowns of the magenta. I prefer the really easy ones of the magenta pivots lower under the 25. It's just gold because it's so easy to see. It gets a little more complicated when they stay above 33, which is why we look for that break threshold. So keep that one in mind. And it was all pretty clean there. We had a couple little rises, faded back, and continued to do the same. I mean, everything was, I think, pretty darn clear with those nice white spikes, always giving us a return back to the zeros, particularly when they're getting over those 40s. Some of them take a little bit longer, like this one, because it led to that big up move. And actually, we should just draw a horizontal line right about where that takes place and becomes a good measure of seeing how long it takes sometimes to get back to it. And that happened in the pre-market right here. So love it when it does that. So easy. As always, though, I'll continue to update you on the Skype chat. And also, FYI, I think on the 21st, I'm going to be heading south and I will be in a remote part of outside of Rome and that, so I will not be doing video reports for the later part of the week because there just won't be any access to do so. Just giving you that heads up. As always, though, trade well. We'll talk later on the Skype chat.